From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 27, 2017. I hope you had a great weekend, ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And we're going to highlight some of the key levels that we will be looking for entry and exit opportunities. This week, there are a few significant news events speckled throughout the week, and you'll want to make note of those and when they happen on your own financial calendars. And as always, be sure to use appropriate risk management strategies in all trade setups. First off, as you look at my chart here, at the very bottom of the chart, you can see I have 3 trades going. Those are actually 3 trades from last week, last Thursday and Friday. A couple of trades that were entered. I locked in profit, locked in with the stop loss, and let them ride over the weekend. And you can see they're still going. Pretty decent, not too bad profit for a few trades held over the weekend. But most of the profit was closed on Friday before the end of trading. I just wanted to bring those up because there's several folks that could be holding those same trades from last week. Let's go ahead and turn that trade window off. Look at the USD CHF, the US dollar versus the Swiss franc. 2 trends we're looking at. The black trend line was a downtrend since the beginning of January, basically. Was a downtrend beginning of February, started a little rally and an uptrend along the red trend line. A couple of other things to point out now that we've seen that. Let's zoom in one time. We are sitting above the 100 period simple moving average. There it is right there, right about the 1.0035 level, just above the red trend line and the pink shaded area. Right now, currently finding support around the yellow zone, 1.0075 down to 1.0060, just above the red trend line. If the previous dip inside the rising trend is anything to tell us, we saw the fall, the rally, some hesitation, and then a new high being made. So we saw last week the fall towards the trend, moving average and trend line, the rally, and not a new high made yet. But if we do see continued bullish price action for the US dollar, wouldn't be too difficult, first off, to see it back to 1.0100, the green zone as resistance, and a break above 1.0115, the top of the green zone, all the way back up here to the orange shaded area. But for the day today, we're going to concentrate on this yellow zone. One of 2 things is going to happen at that yellow zone this week. It's either going to continue to stay above it and rally towards the resistance, which first off will be our green zone. So that's one potential outcome. So if you're looking for opportunities to go long, you want it to stay on top of the yellow zone. I like this candle from last week, the smaller body, longer wick on the bottom, implying some bullish price action. So sitting above 60 to 75 today becomes more likely that we would look to go long than it would be that we would look to go short here for the dollar franc. The only risk there is that the market turns around and goes back in the other direction under the yellow zone, and then if it does that, we're back down here towards the trend line and the pink shaded area that we see here on the chart. I'm trying to get that red trend line selected. There we go, got it. And pull it over here like this. Back towards the pink shaded area would be our next support and the 100 period moving average here for the dollar franc. So exclusively looking at the yellow zone today, 4-hour time frame. If we get down there, we can see what's happening. We're sitting within there. We saw the dip last week, and now just kind of sitting in here. We needed to get above 1.0075, give us confidence, targeting back to the green zone or higher for the dollar franc today. One last thing. Forex Black Book has turned green this week, so that gives us some more upside bias here for the dollar franc. Moving over to the euro dollar, just the exact opposite. We had the black trend line from the beginning of the year. Red trend line started at the beginning of February. So two months this year so far, we've seen 2 different trends. The black trend line, then the red trend line within the months that we have had so far this year. Forex Black Book turned red last week anyway, so we're also bearish on that. We're underneath the 100 period moving average. So pretty much everything is the opposite of the dollar franc. Zooming in a couple of times here on the daily. Take a look at this. We're under this red shaded, or this purple shaded area and the red trend line. So for the day today, that's the main focus. Staying under the purple zone to target back down, and the red trend line to target back down to the yellow zone as your target for support. Below the yellow zone, we'll likely see a new low made all the way back down towards the orange shaded area at the very bottom of the chart. What's the risk in this scenario? Well, the risk is that it breaks back above that purple shaded area and begins heading back up here towards this green shaded area as our next resistance. See if I can pull that over a little bit as our next resistance just there at the bottom of that green zone. Pull that over there like that. So that would be our next resistance. That would also come closer towards the 100 period moving average. So for today, not too hard to see, the purple zone is going to be our area of interest. 4-hour time frame. Zoom it in on the 4-hour a little bit. Look at this, sitting just underneath that purple. I like it on this view, sitting just underneath that purple shaded area today. We've seen it touch it. Significant influx of sell orders sitting underneath it. If you're not in a short already, this is the place to do it here. For the euro dollar, your risk, of course, is a break above the purple shaded area. Forex Black Book, again, is red. Take it over here, GBP, USD, Great British Pound, US dollar. We've been pretty much stuck in a range. And the range that we've been stuck in, or the period of congestion, is between two moving averages. And all the other charts, I don't have the two. But here on the pound dollar, I have the 100 period simple moving average, the green line, and 100 period exponential moving average, the blue line. What's interesting about that, if we zoom it in here, is take a look at how over the past several weeks the market's just been bouncing around between those two moving averages. Obviously today the yellow shaded area between 1.2390, 1.2420 is there to focus in on, because we've seen lots of support here. Take a look, even around that green moving average, that's the simple moving average. Lots of support along there, but today we're challenging it. If the market breaks through, which is bearish now, but if it breaks through 1.2390, I suspect we're looking for a new low to be made that we haven't seen for quite a long time, going all the way back here to 23.45 or so, 1.2345. But it needs to break that yellow zone before we'd have any confidence in that, because if it stays above it, as it has for the past several weeks, we could see a bounce back higher. So keep an eye on that. Forex Black Book did turn red, so if it continues to be bearish and breaks that yellow zone, that could give you an opportunity to go short on the GBP USD. Take it over here to the USD CAD. Of course, the red trend line was a downtrend. Since bottoming out along there, we found a lot of support. Look at this pink shaded area. Look at all the support around this pink shaded area. Rising black trend line beginning to give us some information about a potential change in the trending behavior. The yellow shaded area currently holding as our support between 1.3090, 31.10. We'll zoom it in here in a minute, but I just wanted you to see the long-term trends, the downtrend, and now starting to see a little bit of a rise to the lows along the black trend line. Let's go ahead and take it on down to the 4-hour time frame. Take a look at what happened last week. We saw a dip to the pink zone, touched it briefly, and now we're back up here towards the yellow zone. Congestion in the yellow zone. Last week in the trade room, we spoke about looking for the breakout of this yellow zone, because really, I'm trying to get that yellow zone pulled over a little bit. There we go. Really, we've been in congestion here, a challenge lower, influx of buy orders, and now we're sitting back on top of it. So for the day today, I would say that as long as it's above 31.10, you're more likely to go long than you are to go short, because so far it's had a very difficult time breaking through that yellow shaded area. It spiked it, it challenged it, but didn't break it. So sitting on top of the yellow zone, 31.10, would more likely be the scenario, especially given the parameters that we've seen on the first three currency pairs we've gone over. Most of that is looking pretty strong U.S. dollar. And last week, over the past couple of weeks, we've had some positive news for the U.S. dollar. Back to the blue zone, 31.5570 would be your next resistance target. Let's take it on over to the U.S. yen. This one, of course, a little bit different. The market's been responding to the dollar yen a little bit differently than other currency pairs, but long-term trend has been the blue trend line. But we haven't made a new low yet, so I haven't been able to readjust that trend line. What I mean by that is the last low of that blue trend, the downtrend, was way back here. We haven't made a new low. So in essence, the blue trend line, that trend ended right here. And everything over here is not part of that downtrend. That's the way I'm interpreting that. Interesting enough, 100 period moving average also coming up in towards the green zone. Green zone is holding as our support, and the market has been so far unable to break through it. If this becomes a reversal point, this would be a very interesting area around that 100 period moving average as well. You know, we have a little bit of a downtrend channel here between the blue and the red trend lines here. If I put this red one right about right there, we have a little bit of a downward channel. A break above that red trend line, new higher lows and higher highs could give us a clue to some reversal to go back higher. Only really looking for it to continue lower if it breaks through the green shaded area and the 100 period moving average. So here's the way I'm looking at this. I think, and again, you go back to the old trading model, buy low, sell high. You're at the very bottom of the trend, or the low points of the trend. selling or going short on any currency pair that's at the bottom of the trend, you're being capped. Your support is capping any profits that you would make on the downside. So it doesn't really look like a great place to go short to me because it's on top of support. Now, watching for clues and evidence of reversal may be something to think about, specifically given the other parameters we've seen with all the other U.S. pairs that we've already talked about. If the U.S. dollar gains some strength this week, we may look for this start to turn back higher again. If it doesn't, the U.S. dollar sells off again. Watch for the breakdown of the green shaded area. Your first, of course, obvious resistance is the purple zone, 112.45, 112.70. You saw it back here inside this black box anyway. So we know that right now we're pretty much between our support and resistance here for the dollar yen today. Moving on to the AUD USD, Australian versus US dollar, uptrend, blue trend line, not too hard to see. We have had a difficult time going higher at the top of the chart. Look at the black circles over there on the left. That is resistance, of course. So that gives us some resistance on the right-hand side that we saw all last week. We have indeed pushed underneath the blue trend line today. Take a look at that. Today's the first candle in quite some time. Since making the last high, we are now underneath it. So that could give us a little bit of a clue if this is going to go back down again. Otherwise, again, buy low, sell high. We're at the very top of the trend. I would prefer it to go down before we look for a new buy scenario. Let's take it on down to the 4-hour time frame. Again, looking at the blue trend line connecting to this low right before the last high, we're underneath it today. So for the day today, not too hard to see. Look at all this blue shaded area. As long as it's underneath it, that is resistance. And you don't really want to go long right now underneath that blue zone. Really, the only reason you would go long is it breaks back above that blue zone to target back to the green zone. That's the only reason to go long. Otherwise, it needs to go down first, maybe even down to the orange or maybe even down to this purple shaded area down here. So definitely need it to go down anyway, so I don't think you want to go long right now. More likely underneath 76.80, 76.95, the blue zone, you're potentially intraday short on the AUD USD. Moving over to the NZD USD, we are, of course, in a trade on this currency pair from last week. But again, we've been studying the short opportunities for the past 3 weeks or so. Up here at the convergence of the red, blue, and black trend lines, we took shorts up there. We've been selling this currency pair for 3 weeks now. Nothing really new. I still think it's more of a dominating short than it is a long scenario. Look at the black box on the right-hand side. We've been bouncing around. Resistance at the top green shaded area, some congestion around the purple zone, support at the yellow, and maybe even as deep as this blue shaded area near the 100 period simple moving average. Interesting this week is that the Forex Black Book has turned red. Isn't that interesting? 4-hour time frame doesn't really change it. Just gives us a real good zoomed in view on this. Look at the two resistance at the green zone, blue circle over here on the right. We've taken shorts at both times into that green zone. We've taken shorts, and so far has profited out for us. So we're definitely sitting on top of the purple zone. Don't go short right now. It's on top of the purple shaded area. It would neither need to go back up to the green zone or break through the purple shaded area before you look to go short back down towards the yellow zone at the bottom of our range or trend. And of course, over time, if we get a move against the US dollar and we see it push through 72.40, that could give us a clue that we're looking for some further retracement for the New Zealand dollar over the coming days.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.